In this video, we're going to talk about trends and trend lines, and it's going to be very much a beginner friendly video, sort of just an introduction to what a trend is and what a trend line is. And what we're going to do is we're going to jump over to the whiteboard and actually draw some of these out on the whiteboard and on some actual charts. So my name is Tyler Stokes from StokesTrades.com. I'm on a journey to become a full-time day trader, and we are studying technical analysis. And this is sort of the beginning stages of our pursuit of technical analysis. And the first few videos of technical analysis, we talked about what it was, and we talked about candlesticks, how to draw a candlestick, because that is the most important chart for a day trader. And in that first discussion, we talked about the three main principles of technical analysis, and that was, price action discounts everything, and that's why studying candlesticks is so important. Secondly, prices move in trends, and then thirdly, history repeats itself. So here it is time to sort of talk about that point number 2 there. Prices move in trends. So we want to understand what a trend is, and what a trend line is, and sort of draw some basic ones out. So in simple terms, a trend represents the general direction in which a market or an asset's price is moving. So we're talking stocks. So the movement, the general direction of the price of a stock, that is a trend. And you can have 3 types of trends. You can have an uptrend, a downtrend, and then a sideways trend. So an uptrend is defined by ascending peaks and troughs, and we're going to draw that out. Downtrend is the opposite. That is when you have descending peaks and troughs, so they are going down. And then a sideways trend is also, a horizontal trend or a trendless situation where the peaks and the troughs remain relatively consistent. So peaks, troughs, what are those? Let's jump over to the whiteboard and draw these out. Okay, so for these graphs, we have price on the y-axis, and then you've got time on the x-axis, and that's what is standard with all of these charts. So if we want to first look at what a uptrend is, that is when the stock is moving up and to the right with ascending peaks and troughs. So if stocks move up and move back down a little bit, continue to move up, retrace a little bit, and continue to move up. So the peaks are these things. These are what technical analysts refer to as the peaks. And then the troughs are here at the low points. So for this trend, you can clearly see that it is moving up and to the right, and you have ascending peaks and troughs. So this peak is higher than the previous one. And then the lows, this trough or this low in the price is higher than the previous low or the previous trough. So again, there's different words for different things, but basically we are moving up and to the right. The peaks are rising and the lows are rising as well. So that is characterized by an up trend. And when we draw the trend line out, which we will, we always draw them out on the trough, so on the lows. So for this trend line, we will draw them out later in the video, and you are going to draw them on the ascending lows of the price. So again, prices move in zigzags. When we see a price moving up and to the right, it's constantly zigzagging all around, up and down, coming back, pulling back down, and so on. So it certainly does not move in straight lines. So for a downtrend, very simply, it's just the opposite. We've got our peaks and troughs, and they are descending. So they're going lower. So, this peak is certainly lower than the previous one, and this one is lower than this previous peak. And then the troughs are the same. So this trough or this low in the price is lower than the previous low. So we are in a downtrend. The price is moving down. And then for the sideways trend, and you've got your peaks and troughs, and they're relatively stable in sort of a horizontal manner. So you got your peaks here, and they're all sort of trendless or trending horizontally, and then you've got your troughs there, and that is a sideways trend. So those are the 3 different trends. Very basic drawings here, but that is what we refer to as the peaks and the troughs within the price. So the price always moves in little zigzags. And now we're going to see these trends labeled on an actual candlestick chart for some stock examples. So let's jump back over to the article. So in terms of drawing these trend lines, it's actually very important that you learn how to draw these properly. And this is just an introductory video, so certainly check out some other sources as well, so you fully understand how to draw these out. But I came across this quote from Harry Seldon, who is the founder of the Real Day Trading Reddit group. And this quote sort of stuck with me and helped me understand how important it is to do these trend lines properly. And he said that without the consensus of the masses, technical analysis is meaningless. And here is sort of what I think he means by this. Basically, using trend lines effectively means following methods that are widely accepted in the technical analysis sort of community. So this ensures that the lines that you draw are recognized by most market participants, including big institutions and individual traders. So when many traders agree on the same trend lines, they become more reliable because more people are actually acting on them. So this consensus makes trend lines a powerful tool. And if you just think about it, if you were to just draw trend lines in a particular way that only you did, you wouldn't have any market consensus about it. Other people wouldn't be acting on those same trend lines because you sort of just made them up. So any future predictions that you are forecasting just will not be relevant, and the probability of those happening is very, very low. So that's why doing these properly is important, that you're looking at the same trend lines that other market participants are looking at. So I came across that and I thought that was important to discuss. So we've got your basic trend lines, but we also have these things called horizontal trend lines, which we want to cover first. So let's just understand what these are, and then we'll go look at a candlestick chart and see some horizontal lines. So horizontal lines on a chart are a fundamental aspect of technical analysis, and what they are used for is to identify static price points that signify support and resistance levels. So these are just straight price lines on a chart. So unlike trend lines, which slope and they follow a general direction of the price movement of the trend, a horizontal line remains constant and can cut through candlesticks. And we're going to look at these in just one second. But the key uses here are to find a trading range, to find maybe an entry and exit point. So that's a little bit more on strategy talk, and then to signal various trends. So the ranges, a horizontal line, as we will see, is going to help us identify the range which a stock sort of trades by. So sometimes it lives in a certain upper and lower bound on a certain price. The exit and entry points, so these horizontal lines may provide clear signals for where you might want to buy or you might want to sell the particular stock. And then trend signals, so there might be breakouts above these horizontal lines indicating that the stock is on the move, and so on. So understanding horizontal lines helps traders make informed decisions by highlighting key price levels and potential future movements. So let's jump over to the whiteboard, and we're going to see a clear example of this. So here are the horizontal lines, two of them on the Amazon stock. On Amazon, I'll zoom in a little bit here. We can see here on the right, we've got a price of $101.63, and that is a significant line. You can see that back in September 2019, the stock price rose up and sort of met this line and came down, rose up again, met this line and came down. So this is a resistance here, and then broke out of this line and then started to trend up very significantly. And then we have another horizontal line here at a price of 177. And you can see here that it's acting as another resistance line. The price comes and meets it and comes back down, meets it, goes over a little bit, comes back down. So it's a clear horizontal line here. And then the stock starts a downtrend here. And then we've got this 101, again, a significant line here where, it touches, it comes back up, meets some resistance, comes down, and then breaks through this line again and continues on its uptrend. So these are horizontal lines. You can draw various ones on a stock chart. They can go through candlesticks, and they are just good lines to show, significant price resistance or support levels in this stock, and they can help with other combining these with other sort of trend lines to help you make decisions on buying or selling stock. So these horizontal lines are something to consider learning more about and using when you are studying these charts. Now, in terms of drawing the actual trend line, so that was a horizontal line. Now we want to draw some trend lines, and we're going to actually combine them with the horizontal line that we just spoke about as well. But in terms of drawing trend lines, we do this because we want to, firstly, what we want to do is identify an actual trend. So we can identify a trend within the candlestick chart. We start by determining, whether the market is in a downtrend, uptrend, or sideways trend. So you can sort of just visually see that. And then what you want to do is you want to connect the dots. So for an uptrend, we want to connect at least two of the lowest points on the chart without cutting through the body of a candlestick. For the downtrend, we want to do the opposite. We want to connect two of the highest points without cutting through any candlesticks. So you can't go from tops to bottoms. We want to go from bottom to bottom in an uptrend or from top to top in a downtrend. And you want to sort of connect these candlesticks in sort of the most natural sort of way. And you just sort of need to use some common sense in doing this. And then we would want to extend the line out if we were looking at a live chart. And we want to keep in mind that you don't want your angle to be too small. So sharp angles don't really act as a real indication of support. So again, you just need to use some common sense and do some practicing and look at more examples to understand when, an angle of a trend line is just simply too steep and it's just not going to be useful for any type of analysis. And then in general, the longer the trend line, the more powerful it is. So a longer trend line with many touches on it can signify that it's a powerful trend line. And then, when that breaks out of that, that could be something to strongly consider. So let's jump back over to the whiteboard and look at some examples. Okay, so here is an example of an uptrend line, and this is on the stock Apple, and this is a candlestick chart, and we're in 2023, and we're going to look for January 2023 up into the end of the summer, and you can see here that we have a clear uptrend. So firstly, just looking at this, we can kind of see that the general direction of this stock is up and to the right. It is an uptrend, and we take our trend line, the yellow line here, and we naturally put it on a wick on this particular candlestick, and the natural next progression is up through here all the way up to here, and then beyond this point, this price action here clearly breaks this trend line, making it insignificant any longer. But this trend line through the summer of 2023 is certainly an uptrend line, and certain cases, you might have some outliers like this particular candle that goes beyond this. So the day closed red here. So maybe pre-market, there was some, bad news about Apple or, perhaps, and the market started lower, but clearly it bounced back to a green and a positive day here. So once in a while, those are okay. But in general, this is a natural trend line up and to the right for this particular example. And that is what you would do. That's how you would draw these. You use this candlestick here, this wick, and the natural next progression is up and to the right. And then clearly this trend is broken here as the stock reversed near the beginning of the summer here in 2023. Now, in terms of a downtrend line, here's just one example. This is General Motors, and we're here in February 2022. We can see here we take this trend line and naturally move it all the way down to the summer of 2022, and we can clearly see we've got a downtrend here. We're at a price of $52 down to a price of $34. So this trend line touches these wicks in a down motion. And then here you can clearly see in the summer of 2022, we've got some prices moving higher and clearly making this trend line insignificant any further. So that is a down trend line in that example. Okay, and if we sort of go back to that horizontal chart that we looked at initially, here's Amazon, and we had that significant horizontal line here at $101 and extended out, and it was more significant earlier in this time frame, and our 177 line up here. And now we can look at two trend lines on this one chart. And firstly, we've got this downtrend line from a high peak of around 187, and the price started to trend down in October 2022. So that was really a bad year for the stock market, but you can clearly see this trend line moving down and to the right. So this is a down trend. And then right here, sort of 2023, we've got this significant, price at 101, where, it reached down around 101, and then as it came back up, it broke through 101 and started trending up and to the right. And here we've got this trend line up and to the right here for the year 2023. This stock is trending up and to the right. So that just shows that labeling this horizontal line could be very helpful for your analysis as it came here and certainly broke down below 101. But as it rose back up and it came up above 101, which in the past has been a clear line of resistance in the stock. If we just kind of quickly go back here so we know what we're talking about. 101 was significant back in 2019. It acted as a clear resistance line here. So back, 2023, when it came back up and broke this line, that could be something that as a day trader you would be looking at, and then could be a clear sign that we are back on an uptrend. And that's certainly what happened in the stock. And here's the trend line drawn out there. So that's the significance of the horizontal lines, and that's how you would draw these trend lines. And again, the trend lines do not go through the candlestick; they go through the wicks. But they are not drawn through the candlestick. And as soon as this trend line comes down here and this price action goes above it, this candlestick or this trend line is not significant anymore. These candles clearly broke it. So that trend line is not valid any more. And then these horizontal lines can go through the candlestick, and they're just shown as significant prices that a stock might be interacting with on a regular basis. So in terms of the significance of trend lines, here this is an introduction video for beginners. So we don't really want to talk too much about strategy yet until we have a good foundation of all of these components of technical analysis. But it's important to keep in mind when we're starting to learn this stuff that these lines certainly aren't just lines on a chart. They're reflections of market sentiment, and then traders are going to use these trend lines with more analysis to make buying and selling decisions. So in terms of how important these trend lines are, firstly, they act as support and resistance. And in future videos, we're going to talk more about support and resistance. But we looked at it there in that Amazon stock. That 101 level was a clear resistance level, and as the stock broke out of that level in 2023, it started to trend up. So they can predict areas where prices might find, support or face resistance. And just knowing those areas is important, because as the stock moves beyond those, that could signal, a trading opportunity. Again, as I mentioned, signal entries and exits. So, they help traders determine the optimal points to enter and exit a trade. Certainly trend lines do that. And then obviously they confirm trends. So, you might be wondering or looking at the chart, in order to, fully confirm it, you can draw a line, and that line is sort of a visual confirmation of the market's general direction. Now, with these trend lines, they're sort of classified a few ways. And I think with all classifications like this, not everything is set in stone, and some people might, have different timeframes for these. But we'll just go over sort of three general consensus for classification. So, when you're analyzing market trends, again, it's important to understand the trends can be classified on their duration. So this classification is going to help you determine the potential impact and relevance of a trend and within your trading strategy. So there's three main types: major, intermediate, and minor. So major trends are going to last for a significant period of time. And the general consensus is, over 6 months to over a year in that time frame. If we're in an uptrend, then that would indicate that it's a major trend. If the stock has been moving up for 6 months to a year, and these long-term trends reflect the broader market direction, and they're often influenced by fundamental factors that are happening. Then you've got sort of intermediate trends. These trends may last for several weeks to several months, and these trends are often corrections within a major trend. We're going to look at an example of that. And then you've got minor trends. So minor trends are shorter term movements lasting potentially just a few days or a few weeks. And these trends are often caused by market noise or news events or economic reports and things of that nature. So let's jump back over to the whiteboard and just look at these different classifications on just one simple example. Okay, so you've got the 3 degrees of a trend here in this graph. And this is the exact graph that is shown in the textbook, Technical Analysis of the Financial Markets. It's a good textbook to consider getting if you want to study from a book. It's very, very popular, and I will have a link in the description below this video. But here you can sort of see, based on this diagram, which is referenced from chapter 4 of the book, that you've got your major and your intermediate and near-term trends. So the major trend is certainly from 1, 2, 3, 4 is up. So this might scale out. We might pretend this is a year or so on this time frame. So time here we might be looking at a full year, and from the low 1 here up to 4, we've got a major uptrend. And the uptrend, the major, is an uptrend. We've gone from 1 all the way up to 4. But within that, you've got your secondary, or sometimes intermediate, it's referred to as. You've certainly got a low here. We've gone from 2 down to 3 within a few months. Here we've got a pullback, or we've got a downtrend in this particular secondary or shorter term time frame. And then the near term certainly would be low as well. That could be categorized by this A, B, C sort of movement there. So it's important to know that there are different trends based on the time that you are looking at a particular stock. So a full year here, certainly the uptrend is the trend is up, but within the year, you're going to have consolidation, you're going to have some pullback, and just understand that you can have trends that are found within other types of trends, and it's just going to be based on the time horizon that you are looking at a particular stock for. So then lastly, before we wrap up this video, I want to just talk about, why as a day trader, you might be concerned with more of the longer trend. So in terms of day trading, we're doing short-term trading and price action is everything. And we're kind of looking at the stock from sort of a, minute-to-minute basis, hour to hour, and daily sort of movements. But longer trends, such as these major uptrends, like we just looked at from points 1 to 4, are important for us day traders for several reasons, even though we focus on short-term price movement. So firstly, context for short-term price movements. As you continue to study And as I have learned from my initial 4 months into studying how to become a day trader, I've heard this term many times, that it's always important to look at the overall market first before you diving in and analyzing some stocks. So understanding the overall market trend provides context for the short-term price movements. If the broader market is in a long-term uptrend, day traders might prioritize long positions, knowing that the general market sentiment is bullish. So if we're in a bullish market, that is going to be important to know based on what you're going to do even in the short term. And then trend alignment might be important as well. So trading in the direction of the major trend can increase the probability of success. So you're always going to have people contradict each other, especially in this trading world. But certainly many people do sort of recommend the idea of trading the trend, going with the trend. For example, if the stock is in a long-term uptrend, short-term pullbacks might be seen as buying opportunities. So we all know about buy low, sell high, but you can also sort of buy high and sell higher. So go with the trend, and certainly successful traders, some certainly recommend that strategy. Whether everyone uses it or not, it's certainly something to consider. And again, on the other flip side, in a long-term downtrend, short-term rallies might be seen as selling opportunities. So it's important to know the whole market trend and then the general trend that we are in at the moment, even to make short-term decisions. And then risk management. So, knowing the longer trend might help manage your risk. So, for example, in the long-term trend, if it is up, then a day trader might avoid taking short positions during short-term pullbacks, reducing the risk of trading against major trends. So you might not want to short a stock if you're in an uptrend unless something clearly has a clear signal has broken that trend. So it's important to obviously know that support and resistance levels. So major trends can help identify key support and resistance levels. So we kind of touched on that when we went over some of our examples there. But again, these levels derived from longer term trends can act as significant points of price reversal or consolidation. We saw that with that 101 price of Amazon. So that was something we looked back in the past was a significant resistance level. And then if we were, in the time of that getting broken, that might have signified a good position to buy or go long. Again, market sentiment is also important. Longer trends reflect the broader market sentiment and the underlying economic factors. So day traders, if you're aware of these trends, you can better gauge market sentiment, making more informed decisions about the likelihood of certain price movements. So that's sort of like what we mentioned there, that understanding the market first is always important. It seems to be a message that I've received quite a few times. And then lastly, it's just going to enhance your overall strategy. So incorporating longer trends into any sort of day trading strategy is going to allow for the development of, just a more robust plan. So, if you're combining trend analysis with other technical indicators, that might help you in your trading decisions. Certainly, we don't want too much information. That's been a message as well. You don't want to get overkill with information and too many indicators and too much information. But again, I think it's safe to say that just knowing the trend, the long-term trend, and just knowing where the market is right now is going to be important, even if you're trading from minute to minute, hour to hour as a day trader. So I think we'll leave it at that. Thanks so much for watching. I hope this was useful for you. Certainly very much a intro to trends, an intro to drawing these out on various charts, and something we're going to continue to do and get better at. But I think we certainly went over, what a trend was with the prices, moving upwards. So the peaks and the troughs are ascending, they're getting higher. In a downtrend, everything is getting lower. And then for drawing the trend lines out, certainly something that is going to be important and something I would recommend that you practice doing You need to actually do this stuff rather than just reading about it or just listening to someone else do it. Certainly draw these out yourself, and you're going to find that the more you do this, the better you're going to get at it. I'm certainly just starting, and I've already noticed that I'm becoming better at drawing these out. So thanks so much for watching. Subscribe to this channel. In the next video, we're going to talk more about support and resistance, and then we're going to get into all of the different components of technical analysis. So thanks so much for watching, and I will talk to you in the next video.